Yeah,
Look at his face.
yeah. Too up, too down.
Look at his
Hey,
face.
yeah. Yeah, I wanted the crown and to be celebrated. I rented a tux and I ordered a mink. Stood in the mirror like mama, I made it. Proceeded to brushing the teeth in the sink. Caught me a grill and I'm so melanated. I polished the chain, I ain't gold in the link. And I got me a baby who gave me some babies. I'm raising a lady and building a king. Too cold, you too busy running with another man lane, I guess. Yeah, too bold. I be running on the one way, never change my set like, I don't ever use my signals, yeah. I be in the lane myself, yeah. I don't gotta change my mental, yeah. And I ain't gotta chase my wealth, and I accept my daddy got a kingdom, and everything I ever got is his. If I ever got a problem, I'ma seek him. I never doubt him, been about his biz, oh man, been there. I ain't gotta ride on the wave when the ocean is his. Close with the kid with a
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partner Dale and Cliff back in the saddle again for another edition of Real Estate Friday Training, man. And it's been a very interesting week. Cliff, man, what's going on with you, baby? How you doing big time?
Man, doing good, doing good. Yeah, definitely interesting week. A lot of stuff going down, man. So, but we staying with it.
Yes, sir. And I got to ask the question every single time. Did we get the bag?
Yeah, of course, man. We got the bag this week. Working on a couple of different things, so it's going good, man.
For sure, man. And Cliff, we got another big deal that came across the balance sheet, brother, across the table, brother. It's a 1,046 unit apartment complex
Oh,
in Michigan, baby. Yes, sir.
okay.
Yes, sir. We're looking at maybe a 40 M clip,
Wow,
worth ARV about 114 million to 120 million. Yes, sir, baby.
wow, wow. Yeah, that's
Yes,
a big one
sir.
right there.
Big one. Now the renovation budget that's gonna be around like 20 million. It's a
Wow.
big one. It's Cliff. They have a problem with fires at the place. Fires at the place.
Mm,
Fires, and so the insurance premium is higher than what normally
right.
is because of the fire situation. And so they don't know what to do. And so our team up there in Michigan is out there looking for deals, man. And of course, we get them guys. There's deals out there, man. They're out there, brother, and they're going to become more ripened as the economy goes worse, man. But man, how things going with you, brother? How's the family? How's business going? Holla at your partner.
Man, going good, going well. Man, it's I'm starting to see banks, I think, are a little worried about what's going on with the markets. I think they're
Oh,
creeping back, and so they're being
oh,
more tight
oh.
with what they're seeing. And so um, we're
Mm.
seeing some pushback from the banks in the appraisal space. I'll say that much, right? The
What you
banks are a
said?
little are being little tight with their expectations.
That sound familiar? But that sound familiar. Somebody on the screen said something like this was going to happen. I don't know, man. I think his name was his last name was Bugs. First name Liddell. That's what it is. I don't even know, dog.
Something like that. Something.
It's all good, baby. Well, Cliff, let's just jump into it big time, baby. Real quick, let's jump to the current market analysis, guys. What's going on, real quickly, guys? Man, guys, Cliff, what's going on with the market? What's in the market, Doc? What you seeing?
Man, not much different from last week. It's kind of staying flat here in Dallas for the most part. I've seen it drop a little bit on some higher end properties, but I've seen some other areas that it's booming. So I think it's local, like
Sure,
like everything in real estate. But I would say
sure.
generally across the market, it's actually coming down a little bit, if not staying
Really,
flat. It's been flat for
really,
a little while, so I think it's right there. I see houses coming on the market. There's more inventory coming open in Dallas than there has
really.
been. Yeah,
Interesting.
not
What
much,
part of
but a little
Dallas?
bit more.
What part of Dallas are you seeing this type of movement? What are you seeing?
I see a lot in Fort Worth.
Funky Town?
Hmm.
Funky Town is coming up, man. I mean, Cliff, there's really not a lot of investors in Funky Town, is it?
Not man, it not too many. I love Fort Worth. I
Me
own
too.
several properties out there. I flip
Me too.
many properties out there. Man, I like it. A matter of fact, I'm coming back to Dallas. I'm starting to
Mm,
look at some deals, but there's not
yeah.
the problem that I'm seeing is there aren't any big discounts out here in Dallas.
Not
It's
yet. Not
it's a
yet.
tight market.
People are still thinking that they're still thinking from a retail standpoint, a good market standpoint, and they have not made the pivot to this is a crappy market right now. This is a crappy market. This is not a healthy market at all. But people really believe that it is a good market. You know what I'm saying? And so that's what's we got to make that pivot, guys. Get out of la la land. Get out of la la land. So I love Fort Worth as well, man. I love Fort Worth, Arlington, Haltom City, all Tarrant County. There's not a lot of investors there. And so I like to go where there's at least amount of competition. I don't mind competition because I'm a beach in the first place because I'm that dude. But at the exact same time, if I have to, if I go to play, if I like going to places where I have to compete, right?
Yeah.
I don't mind competition, but that's what I like to do as well. That's why I like mid-tier towns. And so Tarrant County is so untapped. Like that, everybody named Mom in Dallas County.
Yeah,
I mean, it's crazy. It's crazy. So go ahead, Cliff.
yeah. Well, just saying what I see a lot of investors doing in Tarrant County is they going in the hood and they build it.
Mhm.
What they're doing is they're building in the hood
Yeah.
and they're building these nice. They gentrifying it
Yes, they
and they're
are.
building townhomes on one lot instead of just
Yes, they
building one house. They're doing two, and that's
Yeah.
how they're doing it. Yeah,
And those townhomes are going straight up off the cliff. Straight up. Not so
three
much
story.
wide. Up. Yes, sir.
Right. Yeah, they're going
Yes,
3 stories
sir.
straight up. They're selling for like 600,000
Yes,
typically.
sir. Doc.
Yeah.
Yes, sir. And the reason why they go up, guys, is because of the fact that you can fit my house on the lot itself, and
Mhm.
also most likely that lot is probably small, maybe a quarter of an acre, maybe even a 1/4 of an acre as well. Also, so you got to build up, which is good for a developer. They can actually build instead of building out, they build up and charge the same price point and the higher. Real simple. Not hard at all. Not hard at all. At all. Now, Cliff, man, bro, tell everybody, man, what's going on with these banks, man. Now, you made a comment about the banks concerning working with appraisers. What's going on, man? I know you said that the banks are looking a little skittish of what's going on with the market. Let people know what's going on.
I think the banks are just, they're looking at the analysis and realizing that without the cut, it may be getting tight. And so I think
Mm,
they're going to be more stringent. They've already raised what the requirements are for mortgages, right?
yes, yeah,
I
yeah,
think they're going to continue with that. The interest rates rose,
yes,
right? In terms of
yes.
mortgages, they dropped down to almost 6.7 at one
Yeah,
point.
they
Now
did.
they're back up to about 7.2.
So they went back up. I told everybody. I told everybody. Go ahead. Go ahead.
Um, yeah, so yeah, we're starting to see just them add more pressure just because what's on their books. I think that they're a little
Mm,
worried about this may be higher for longer, and they may not have that
yeah.
revenue coming in like they want. They don't want any more anything on their books that's going to scare them.
Agree. This is what I was saying initially. People were really doing an investing and hoping strategy. That's a terrible strategy to do. Everybody was hoping for a rate cut so they can begin to invest. Sophisticated investors, guys, we do not wait on it in interest rates. We just become more aggressive in our strategy, right? It's very simple. If the cost of your capital goes up, you have to be more of a negotiating hawk to cut your costs down. Does that make
Mm,
sense? Because of the fact that your consumer does not want to. I don't think it's wise to pass the cost on to the consumer because they're bringing my bag, right? So that if I make the consumer harder to bring the bag to me, I'm gonna be broke. Am I right, Cliff?
right.
It's
Yep.
real simple. And so that's why I was saying, guys, the math just ain't mathing for me for them to begin to cut rates because of the fact that their partner, the government, keeps spending like drunken sailors. It didn't make any sense. That's why I say the Federal Reserve, the Fed, they are the biggest PR firm on the planet. They're spinning their behinds off. And for me, I look at the fruits of the economy, not what someone is telling me. The lion's share of the investors look at what people are telling them to do and that they do it versus receiving the information and then engaging that against the fruits of the economy. Would you agree, Cliff?
Yeah. Yeah. It's what I see though when I looked at the inflation is it looks like there's two main areas that are causing the inflation. It's
Yeah,
housing, rents
yeah,
are high,
yeah,
they've been going up,
yeah.
and it's insurance.
It is.
Insurance is high. If you
Mm-hmm,
remove, so this is what I found interesting. Is two things. First
mm-hmm.
thing is if you remove housing and insurance,
Yeah,
interest rates or inflation is 2%.
correct.
So it's that's all we're waiting on is housing, and housing is cyclical, so we need time to go by. And insurance, this makes sense. If housing has gone up,
Mm-hmm.
the cost to insure that house goes up.
Yes, it has.
So
Yes,
that's
it will.
why those prices continue to go up. The second thing I'll mention too is the in Europe, they have
Mhm.
a different way of measuring inflation. They
Correct.
they don't measure it the way we do in the United States.
Correct.
So when you actually take the European strategy for measuring
Mm-hmm.
inflation,
Mm-hmm.
inflation's at 2%.
Now, here's again, those numbers are funny. Numbers are funny because people do not account for the government continuing to spend. So this whole thing is not about industries; it's about government spending, and people tend to forget. People, we don't, guys, we don't have a money fairy. It does not exist. It does not, and too many people make their investment strategies based on the money fairy. It don't exist. It's a pipe dream. Guys, look at how they're spending. They're trying to manufacture a cash flowing economy. You can't do that. It has to work organically. That's why we have something called a currency. The root word of currency is current, which means to flow naturally, not manufacture the flow. Does that make some sense, Cliff?
Exactly. Yeah, that's the whole
Gotcha.
system is as soon as we got off the gold standard, every time you created money, you would
Sure.
now create a virtual debt that can
Correct.
never be paid back
Correct.
because there wasn't that money didn't exist in the system. So they had to
Correct.
inflate it. And once they
Correct.
created that, it created a cycle that will last forever.
Correct, correct, guys, correct, guys. So, guys, a little bit of a current market analysis, guys, for you to begin to understand how the economy works and how currency works, so you can make the wiser decision for you and your family, guys. Again, look at the fruits of the economy, not what someone on TV tells you to do. Also, vet us. We hope we're wrong, but we probably right. Be honest with you, but it's all good, baby. Let's walk this thing, now, guys.
Yeah.
Go
As a
ahead.
disclaimer, talk to your real estate professional, talk
There
to
you
your
go.
attorney,
There
and
you
get
go.
any other advice that you need to get. We are
Yeah.
just giving our advice and our opinion on this. So
There
you
you
always want
go.
to throw that disclaimer. Everybody got
Gotta do that. Amen. We got a comment on Instagram. Tammy, how you doing, Tammy? Good to see you. What's up, Steve? How you doing? He says they are manufacturing a depression. Yes, and we're gonna tell you how in a second. Did you, man, Tammy? You on to something, baby? We're gonna tell you in a second, y'all. Now, guys, here we go, man. Here's what you're here to see, guys. There's a tax showdown going on right now, and it's about unrealized gains, wealth taxes back being proposed, right? In the previous real estate training live, we talked about a wealth tax. And we're gonna go into this again here in a second, right? That originated from the local, then it went to the state, then it went to the region, and they got appealed to the Supreme Court. Now, guys, it is now the federal government is talking about it now, right? Secretary Yellen went before the Senate and spoke about unrealized gains being charged as a wealth tax, and they claim it as a wealth tax. Now, we're going to bring in our partner real fast, DB Dan Bongino, and he's going to talk about, and we're going to actually play what she's saying. Here we go. Let's get it in. Here we go.
You want to pay a tax on your stock portfolio? You mean like capital gains when I sell a stock? No, that's not what I mean. I mean a tax on what you own, despite the fact that you haven't sold any of it.
Correct.
You want to pay a tax on your house, the value of your house, because the value went up? I want you to understand this is absolutely coming if Joe Biden wins the presidency and they take control of the House or the Senate. This is not a conspiracy theory. This is not Dan Bongino trying to gin you up. Say you bought your house for $300,000. It's worth $500,000. You did $50,000 in renovations. You have a capital gain of $150,000. How do you feel about paying like a 40% tax on that every year?
Every year.
You'd probably have to sell your house, right? Most of us don't have 10, 15, 20,000 spare bucks laying around to fork over to the government in addition to the taxes we have now. Oh, Dan, you're just making that up. They don't want it. It's
Listen,
called a
guys.
wealth tax.
There we go.
Notice, it's not called an income tax. It's a wealth tax.
Ooh.
Here's Janet Yellen in Congress arguing for this thing and claiming falsely that it's a tax on wealthy people's incomes. It is not. It's a tax on wealth that's going to kick you right in the nuts.
Listen close.
What President Biden is proposing to do is to ask wealthy people, high-income people, to pay their fair share. It's important that they be successful, that we have an economy that people can invent things and run businesses and earn healthy profits, but then they need to pay their fair share. And with tax rates on dividends and capital gains that are lower than many people pay on ordinary income, with step-up of basis, with no taxation of unrealized capital gains, the wealthy pay. I believe a recent calculation shows that some of the very wealthiest people pay on average about 8% of their total incomes in taxes, and that should be remedied, and it provides a very ample pool to invest in our economy.
Cliff, Cliff, your comments are, brother?
I wish I had something. You can't tax unrealized gains. It's unrealized. You know, so
Yep.
that's tough to understand. And I always say this. You know, I believe in taxes. I think people should pay taxes. I'm a believer in that. But when people say fair share, I wish they would, instead of saying fair share, they gave a number. That would help. I'm okay, say fair share, but put a number after it. I think they should pay their fair share 25%. I think they should pay their fair share 50%. Cool. Give me a number, because I agree they should pay their fair share. I bet Dale agrees they should pay their fair share. These are different. Just give me a number so I understand what we're talking about. We just saying fair share. Everybody can say that. I just wish we had some numbers that we could speak about so we could talk about the same thing. But
I'm glad you said numbers, Cliff. Let's keep going. Let's keep going. Come on back to this board, DB. You said numbers. I'm glad you did this. I agree with you what you said 1,000%. Let's keep going, guys. Facts. Here we go.
Okay, the wealthy do not pay 8%. She's full of shit. She absolutely is making that up. She's lying to your face because she's a garbage person like everyone else in this administration. Where did she get that number? She got that number because they want a wealth tax that is going to kick you in the nads too. Imagine this, folks. Let me just ask you a simple question. I'll give you my example. I own a good chunk of Rumble stock, okay? I have not cashed it in because I like Rumble and I think the stock is great and I love it and I'm going to hold it. So let's just say, although I've sold none of it, I get a bill next year for, say, 20% of the value and whatever. Say it's $1 million, whatever. It doesn't matter the number. Folks, I don't have $1 million sitting in the bank to write to the government in addition to the millions I have to give to the government elsewhere. So what would I have to do? Anyone in the chat know? What would I have to do to get the $1 million?
Sell it.
To pay the tax on the stock I haven't sold?
Sell it.
Some of you are super smart. You're like, Dan, you'd have to sell the stock. Yes, liberal dipshits. I'd have to sell, so you're telling me other people who own stock would have to do the same thing?
Watch what happens.
Yes.
Yes, what happens
Well, if a lot of people sold their stock to give the money to the government, which flooded the market with stock, supply, demand, wouldn't that mean the stock market would crash? You're getting it now, liberal dumb fucks. You're getting it. You're getting slow. It's coming. It's coming.
So Cliff. Do you see? Do you see if that was to happen? What will be the natural consequence to that entire thing?
Oh yeah, he colorful was pointing it out, but ultimately, I mean, if we just talking about math, right? We just talking about math, and we just talking about numbers, and the idea is, if I went to Dale, I said, Dale, I need $1 million from you. You owe me $1 million. He said, well, my million is in my portfolio. I'm like, cool, sell it.
Mm-hmm.
That's the only
Mm-hmm.
way to get that million if he doesn't have it is to go through that. So, but again, like you said, if his entire portfolio is in, I don't know, Mississippi, that might cause the markets in Mississippi, right? So you can't tax
Yeah,
unrealized gains. It's just
y'all. This I want y'all to understand what just happened. That was the Secretary of Treasury, the current one, talking about laying a premise that the wealthy don't pay their fair share, right? Again, that's normal, and then prescribing a solution to them not paying their fair share by taxing on unrealized gains. Cliff, let me ask you a quick question. You're a smart person. When it comes to if this was to be implemented, right? Let's play this out. And the IRS, right, begins to charge unrealized gains because Congress passes a law talking about this, right? Will the IRS go after Fortune 1,000 and 500 companies?
no,
Why?
because a Fortune 1000 companies probably got ex IRS agents on their tax team.
So they got resources to pay for that team, right?
Right.
So if the government doesn't go after Fortune 1,000 or Fortune 500 countries or the wealthy, who's left over, Cliff?
Oh, you got the middle class.
The middle class. Now, Cliff, do they have the money to go after to fight the IRS?
Mm.
So who's left out to roost?
Oh yeah, the middle class because they can't take advantage of the different ways. For example, you could use different debt instruments from
Sure,
other countries, right?
sure,
Like for example, Google. I think Microsoft uses Ireland, right?
sure, sure.
They use them as tax havens. The
Hmm.
average person can't do that. They're
You
not
can do
doing them
that
type of schemes and keeping up with all those
for sure.
accounting. They're not doing all that.
For sure. Now let's keep it going a little bit. Let's again, they're going after the middle class. Let's gain this out. And the middle class doesn't have the resources to combat this type of pursuit when it comes to paying an unrealized gains tax, guys. And guys, this is for your house, your cars, your businesses, your dogs, right? Paintings, anything that can gen up some type of value, they'll come after it, right? And what they're going to do is now, before I go there, let's go here, Cliff. They go after them, and the middle class cannot pay this at all, right? Can't pay it at all. They're forced to sell their assets, Cliff. And the middle class, what is the majority of the wealth that the middle class actually have? What do they have that in?
Oh, their house,
The house and where else?
stock, cars.
So it's probably safe to conclude if the majority of the middle class cannot combat this at all because they don't have the resources, they're going to be forced to sell their wealth, their house, and their cars, and the stock market, which will lead to what when it comes to the market?
Oh, it's gonna cause it to fall.
So
So,
depression.
but wouldn't I'm thinking of it? Wouldn't that be double taxation because you're being taxed on the property already?
Yes.
So you
Yes,
can't get
sir.
taxed again on that same
Yes.
property. That's double taxation.
Yes. Let's keep going, guys. It goes deeper. Let's keep going. Let's keep gaming this out. And I'm going to bring in Bill O'Reilly in a second, and we're going to talk about what is unrealized gains. Okay? Let's game this out again. Here's how they're going to do this, right? And they got this from California. Here's how they're going to do this, guys. It's going to be very simple. What they're going to do is, Cliff, you are a licensed appraiser, correct?
Mhm.
So someone calls you to go out and appraise a property to determine what the value is, right?
Right.
Let's say if you did a property here in Dallas, right? And it says worth $200,000. This is what you prescribe the value of your property report. Everything's good to go, right? What happens is the government says, we don't give a damn what Cliff said. We're going to hire our own attorneys to come out there and determine the value of your assets on our own. Let's go a little deeper. They then declare that the value of your house It's not $200,000, it's $250,000. So now they got you in two ways: a higher dollar amount, right? So they can charge more tax revenue because taxes are charged in a percentage. And then number two, Cliff, you committed fraud because you lied to them and said that it was worth 200,000. You're going to say, I didn't say that. The appraiser said that. They're going to say, we don't give them about none of that. The value that our attorneys who the government sent says it's higher than what the appraiser said. You have committed fraud. So now they got you twice. That's part of the wealth tax scheme, guys. It's real simple. It's not hard. And I can tell you this right now, the Fortune 1000 and the Fortune 500 companies and the wealthy will have no problem combating this. And the IRS and the government won't waste any resources going after them. Why? Because they'll lose. They'll lose all day long. It's simple. They can appeal this to the Supreme Court. Let's go a little deeper, Cliff. This is a legal theory being presented, which is really unconstitutional, right? Get your pens and papers out, guys, because we're going deep here, right? It's unconstitutional. So if it's unconstitutional, Cliff, why would the government try to bring this type of case? Because if it goes to the Supreme Court, it's going to be struck down, right? Well, simple, real good question. Number one, they're originating legal theories in the courtroom to create precedents that becomes de facto decrees from judges and from the state, district, federal, and also county judges as well. Also, so now they created all of these legal precedences that they can say. So when someone tries to fight them, they say no. In the Circuit Court of Appeals in California, they actually said this was cool because they know that the middle class can't fight them. Can't fight them.
Yeah, the biggest problem is that I think they're trying to, and we have a number of different basically the government has money problems, and and that should be a scary thing to a lot of people. Then when they see our debt, what they think is, oh man, the government owes a lot. What they don't understand is, no, the government doesn't owe a lot. The government doesn't really exist. The government is us. You owe a lot.
Yes.
So they need that any extra cash you got, they need it because they spent it, right?
Yes, sir. Yes,
So
sir.
the problem is that they need more money coming in versus they need to run their business more efficiently. Other businesses that they have revenue problems, they tend to cut. They tend to get smaller to try to become more efficient and effective to try to overcome some of their financial issues. The government
Correct.
does not cut. They don't cut to overcome their financial issues. They tax to overcome their financial issues.
Good observation, Cliff. And notice that tax by percentage.
Mm-hmm.
You understand that in an inflationary economy, guys, the government brings in records amount of tax revenue. Because why? They charge on percentages. If the cost of goods and services is going up, what also goes up? Your tax liability. It's simple. Now, what is unrealized gains? I'm glad you actually asked that question, guys. Here's Bill O'Reilly. He's going to break this down, guys, real quickly on where this is coming from. And there's literally there's literally a case from the Supreme Court right now that if they actually rule on this, it shuts down everything else. But if they rule wrong, we're in some trouble. Here we go.
The progressive left wants a socialist nation. They want strong federal government in Washington to tell all of us what we can and cannot have. The way you get that is by passing a so-called wealth tax.
Here we go.
Where the government comes in to your life and evaluates everything that you have.
Everything.
Takes a piece. Even after you paid your income tax and
After.
every other tax they slap on you.
Yes, sir.
And not only do they take a piece of what you have,
Yep.
they take a piece of what you've gained on paper.
Wow.
So if you bought Apple at a low price and now you hold it, you have a profit on paper from Apple stock. But you haven't gotten the money because you're holding the stock. You think it'll go higher. Government wants to come in and take a percentage of the paper profit. Okay, wealth tax. If Apple then crashes and comes down and not worth as much as when the government took whatever they're going to take, you don't get a refund. You don't get anything back. If a wealth tax is passed, no one's going to invest in anything. That would just crash the economy, which is what the progressives want. They want the private marketplace, capitalism, to blow up so they can replace it with socialism. This is what it is. Now, I don't know. I can't make it any clearer than that. So there is a Supreme Court case on this.
Here we go.
Charles and Kathleen Moore, retired couple from Redmond, Washington, were taxed
Yes.
on a gain they had, an investment they had that they didn't cash in. So they filed a federal lawsuit saying,
So, guys, this concept that we're talking about, this just did not happen. This is not theory. They've already been taxed already. It's done. It's been done. So, unconstitutional act has already happened already. Let's keep going, guys. Here we go. Let's keep going.
you can't do that. The Constitution says this, quote,
Here we go. Listen.
Congress shall have the power to lay and collect taxes on incomes from whatever source derived without apportionment to the several states and without regard to any census or enumeration. The last part of that means that there's no wiggle room, that Congress and the federal government can tax your income, money you receive, real money,
Real money.
income, not that you might receive, that you have on paper. No. Now, this is in front of the Supreme Court. It will be decided next June.
In June.
My prediction, and we'll get this on tape, is 6-3 in favor of the Moors, that the government cannot tax unrealized gains. Supreme Court's going to stop it. But
now, hold on.
the Ninth Circuit Court of
Listen
Appeals,
to
the
this.
federal court in California in the West, said it's okay. That's why it's at the Supreme Court level. So the
Cliff, what Bill just said is the Ninth Circuit Court of Appeals, which is the step right before the Supreme Court in California. This is again located in California, right? In California, they already ruled that this was constitutional. Already did. So the Moors had to appeal to the Supreme Court to get this stricken down. So the Moors didn't have the resource to get this done. This would have become a precedence.
Yeah, I don't understand how you can implement it. It seems very difficult. So, because wouldn't you have to provide all your assets every year so that you could see what the assets are worth this year than last year? And then
simple. That's correct, Cliff. They'll just subpoena you. Just subpoena you. Yeah.
So, okay, an example of this, right? So me and you open a bunch of restaurants.
Yes,
we
correct.
go public. Cool.
Correct.
Got a lot of stock.
Yeah.
If I haven't sold it yet, cool. I haven't sold it. I want to own that company. Me and you started it. We're founders. I want to own our stock. If the government came in and forced me to sell that stock, you are forcing me to no longer be an owner in my own company. How
Correct.
can you force me to no longer own my own company through something that I have not done illegally? I don't that doesn't make sense to me. It's like, well, we started a restaurant, we went public.
Sure.
It's doing well. I haven't sold any. I want to hold that wealth. I want to pass it on, whatever I want to do. How can you tax me on my own? Because if I have to sell portions of it, then I don't own it, and now some other venture capital is going to take it over. I don't want that.
Because they can. Think about this, Cliff. Look at how this is done. The Moors are located in the state of Washington. Now, Washington, D.C., the state above California and Oregon, the state of Washington, right? Washington is super liberal. It's super liberal. And they were taxed on unrealized gains after their income tax and all other taxable income after. So they were taxed probably 3 or 4 or 5 times.
That's an interesting case. I gotta definitely take a look at that and see what's up with that.
And the Supreme Court is ruling on this case. They've already heard it in June, which is we're in April, so in a couple months, this will be ruled on. It's to be ruled on. And if it's 6-3, which I believe that's what it would be, okay, cool. Now they have a precedent to say, yo, this cannot be. This is unconstitutional because of Supreme Court, the U.S. government versus the Moors. The Supreme Court ruled this was unconstitutional. So it strikes down, and their ruling overrides all rulings nationwide on this topic. All rulings. But if they rule wrong, something. But I got to tell this again, Cliff. The Ninth Circuit of Appeals, which was a step right before the Supreme Court, is the most powerful court in the western part of the United States, the most liberal court in the United States. Bro, they ruled that this unrealized gains tax was constitutional. Because what they did was what they're doing real quickly is let's go back to the 16th Amendment real fast. To 16th Amendment, remember it. Let's read this real fast together, guys. Real quickly. Here we go. This is the 16th Amendment. It says, Congress shall have power to collect taxes on incomes. The key thing there, Cliff, is incomes. That incomes is money that you have received. What the government was actually saying is they're saying they want to tax you they're defining income as income that you have not received. Even the paper gains in their definition is income. That's what they do. They're trying to redefine the word incomes in the 16th Amendment. And all they needed was a state, county, a district, or a federal judge or judges to say, yes, you can redefine that letter. You can redefine that term. And they've done that until the Moors appealed to the Supreme Court.
Yeah, I don't know how they're gonna make that work. That doesn't make any logical sense how you can come to that conclusion. Even if you wanted to, even if I agree with you, I can't tax money that you haven't received.
Mhm.
You know, that doesn't make any sense. That it's not income. I can't spend it. They're saying the ability to possibly spend it is income. It's
Correct.
wealth growth.
Correct. They're saying, yes.
And to me, so what? I don't understand what the point of that is. So you're saying that you want their wealth, you want their taxes for what exactly? What are we doing so much with the taxes we're doing now that makes you go, if we just had a little more, if we just had an extra billion, if we just had an extra 100 billion, that would do it. That would change it. I don't see an extra 100 billion changing what even if they were able to execute this. I don't understand how that changes what our issue is. If we have a spending problem, we have a debt problem. 100 billion doesn't solve it, even if it's every year. So in an effort to do what? Tax something we've never taxed so that we can do things we've always been doing. That doesn't make sense to me.
Yeah, you are thinking this thing through logic, not through a philosophy. These people are philosophers when it comes to this type of stuff. It's really Machiavellian. They truly believe that you have been placed here to serve them. Your money is their money, and how they get it out of you is via tax and inflation. The government loves inflation. They love taxes because that's how they steal money from you legally. Legally. That's why they will never stop spending, because then where are they going to make their money from? Because they make their money, a lot of their money on, put it like this, Cliff, have you ever wondered, brother, if the government is bringing in taxable income, why did they raise the debt ceiling to pay their bills? Why?
They spent more than they have.
But that's great. But to I agree with that, but to pay their bills, they just raise the debt ceiling. They don't use the taxable income to pay. They just raise the debt ceiling. So where did the tax money go to? Uh-oh. There we go.
You gotta look at the treasury and see.
Because the Treasury, all they do is just manufacture new T-bills or bonds, ship it over to the Fed does that. Ship it over to the Treasury. Treasury then monetizes it, right, by selling to the banks, right, which is fine at some type of rate, and they just do it in a circle. None of the tax revenue goes back to the Fed. None of that. They just create it out of thin air.
Yeah, and it's interesting too because the banks make up their own money to buy the fake money, and then they give that fake money. They have to give 6% returns. The banks are required to give 6% of all money they get lent out through the Federal Reserve's line back to the
Yes.
Federal Reserve.
Correct.
But the Federal Reserve printed the money, lent it to the banks that print their own money, they give it back to the. It's wild.
It's wild, Cliff. It's just man, you're infusing logic into the equation. They're operating off of philosophy. The philosophy is we own everything, you own nothing. Who are you to oppose what we want to impose on you? We're being placed to the rule, not you. That's their philosophy. So that's why these courts, really Ninth Circuit Court of Appeals, they say this is cool, no problem. Change the definition, no problem. It's all good. We're in a debtor nation, a debtor system. That's why we have something called a currency. Money has to. A currency means the root word of currency is current. It means flow. If money is not flowing organically via free market capitalism, it destroys itself. Because then the government has to infuse in capital to manufacture cash flow, but that's just new fake money into the system. So therefore, inflation happens every time, like a big old balloon that's going to pop. Sad, Cliff. Sad, bro. Sad.
Yeah.
But man, here we go, guys. Go ahead, Cliff. What you want to say, brother?
Oh no, that's the way it's going right now. It's we just need to get to a base level. Really what happened is just the financial. The pandemic. We did a bunch of financial different things to try to manipulate the system. We lowered interest rates and then funded money into the system. The truth of the matter is the government does not have money. It doesn't have money. So when we get into these issues like 2008, 2009, and the pandemic, the government feels like they have to solve the problem. But they can't solve the problem because they don't have money.
They don't.
They're broke. So the only thing they have is to print money. So they inflate their way out of problems every time. And then they want to get mad at the rich who own assets that benefit from that inflation and say we need that money back that we just inflated.
Sure. It's real simple. It's wild, guys, but I know we spent about 40 minutes on the issue. Let's give you guys some solutions real quickly here on this. But Cliff is spot on. He's spot on. They're going to inflate the debt away. That's the reason why they haven't changed their point of view. Just print some more money. Just print some more money. Send some more money over Ukraine. More money to Ukraine. Nope. Nothing in America that's sending across the seas. Why? Because of the fact that the biggest buyer of our debt, guys, has been not other countries. No, it's been the Fed. That's growing the balance sheet. That's it. That's all they've done. And they have forced the banks to have to come to the discount window to borrow more money. So it just keeps on going in a circle. But here's a real estate kind of move, guys. It's real simple. Kind of move for tax saving strategies. Cliff said it best, guys. He said, you got to buy assets, guys. Now you may say, Dale, if I buy assets, what if the Supreme Court says the redefines that word? I don't think they will, but just say for instance, hypothetically they will. You need to master the art of leverage debt because of the fact that the government cannot tax debt because debt is an expense. This is when you need to be getting with a good wealth advisor, not a financial planner, a wealth advisor. Have a real estate plan and a securities plan and an equities plan, right? And learn how to originate good debt that you can put into the market to make you money versus relying on equities and real estate, right, to grow in value. And this is based on the premise of this thing being changed when it comes to unrealized wealth tax, right, on the gains. You're gonna have to manufacture or can become a master at manufacturing debt to lower your tax liability. Cliff, you agree, brother?
Yeah, I mean it's the only way. It's how the rich do it. It's been going on for a long time. Is you got to have assets, something that's worth something that's going to go up and be inflated over time. And so time, and when that happens, time becomes your asset. It becomes your yeah, exactly your asset because as time goes, inflation goes, and as inflation goes, your wealth goes.
It's
So
real
it
simple. Yep,
works for you.
it
And
does.
so, yeah, and the easiest asset in the world is real estate. That's why the
It is.
banks are in real estate. And,
Yes.
this is the easiest way in the world, right? Go to a bank, tell them you like Microsoft. You say it's a big company. I think it's going up. I want $100,000 to buy Microsoft. They'll say
Correct.
no. You
Hmm.
tell them I'm going to go buy a house. They'll say let's get an appraisal.
Yes,
You know,
sir.
let's take a look at this because we can give you the money. And so the biggest asset to leverage is real estate. So learn real estate. Listen to what we're saying. Um, we're in this game, and once you get cash flow going and you have that coming in, man, it's great for you, and it has a lot of tax advantages for you as well. So, man, you got to buy assets.
That Cliff said it 1,000. I agree with that 1,000%, guys. Really going to actually have to learn how to buy assets and again leverage debt. Learn how to manage debt well. Debt has been a term that uneducated teachers have taught to be a bad instrument. That's actually incorrect. Now, don't get me wrong, debt can be dangerous, sure. But that's when you grow in wisdom, knowledge, and understanding to be able to manage that the right way. The banks use debt. Microsoft uses debt. So does Warren Buffett. They all use debt. And their wealth is in the billions. They make me look broke. Like for real. So if they can manage it, why can't you manage it? It's just learn how to manage the debt right. Become a master at buying assets by learning how to leverage debt to acquire them and to increase the value of your debt as well. Also, you'll be amazed that when you actually file for your taxes, the government will send you a check in the mail every time. Because why? You're providing a service that the government doesn't want to be in, which is housing, investing in smaller companies to generate a revenue for the company, that generates revenue for employees, which then pays property taxes and income taxes and FICA taxes and Medicare taxes. You are assisting the government in driving taxable revenue. That's why the IRS gives you a tax code. Just follow it. That's it, Cliff. You agree, Cliff?
Yep, 100%.
Good
Like,
stuff, man. Woo, Cliff, that was a lot, brother. That was a
yeah,
lot,
yeah,
man.
yeah. A lot of good info.
A lot of good info, man. All right, guys. Real quickly here, guys, before we get off. Again, if you're needing assistance when it comes to appraising it all, guys, go to hunterappraisal.com. That's Cliff's company when it comes to appraising. He's extremely busy right now, guys. And so to have someone that you can call to get some counsel and also to provide a service if you are in Texas, of course. But he does have ways to potentially serve you in other states as well. Also,
Hmm.
just reach out to him, ask what he can do for you. I can tell you right now, if you could actually have an appraiser that you know and trust to provide the service for you, for what would it be a residential property, maybe even a commercial property as well, guys. Reach out to Cliff. He's the best I've ever seen do it. Cliff, you want to say anything about appraising, brother?
Yeah, just reach out. You can schedule. We'll talk, go over some different information. Not only that, just if you're looking at an investment property, you can talk. We can talk through it, at least getting the value of it. We also have the cash flow club as well, where we actually get
Mm-hmm.
anybody involved who wants to go in depth and be able to have two. Man, I'm telling you right now, Dale. I don't know how we don't have lots more people in the cash flow club because for what was it, $100 a month,
Mm-hmm.
you get the training that we put together. Like put it this way, just the knowledge of Dale understanding the financing, me telling you about how to value a property from an appraiser's perspective, and then you also get to speak with us. Man, I would highly advise that you just hop on there and at least buy it, learn. If you buy one house, it will be 100% worth it, without a doubt. Without a doubt. So yeah,
Mhm.
go to hunterappraisal.com. Check me out. Want an appraisal? You want to do one-on-one? I can help you out with that. Also hit up the Cash Flow Club. You get me and Dale, and you get more in depth into the investing side. Man, it's a great value. Just take a look. Go to the QR code. Look it up. Buy it. I promise you'll be worth it.
Guys, we're talking about $99. If you're crying over $99, what you're doing is not right. You got to change what you're doing. If you're crying over $99, $99, man, it's something like yesterday. I was at an event, Cliff, and with a good friend of mine, Matt Sapala, invited me out, and we had a VIP table. Me and Matt were the wealthiest people there by God's grace. But to be at a table with multimillionaires asking questions, you know how much money the people pay to be at the table? $147, and they got probably about $25-30 million worth of game there for $147. That for Cliff, did we have access to that at that going up, brother, when we was trying to get everything started?
Nah.
Not at
I
all. So
wish.
$99, Doc. Cash Flow Club, guys, bundle, which is great, guys. On-demand training, no problem with it at all. And we have been pushing this at all that hard because we've been in the lab, man, buying a lot of real estate. But we're going to begin pushing this really hard, guys. I do mean hard, extremely hard, and really assist people to actually want to invest in real estate. And we will also fund your transaction. So wait a minute, you get someone that can teach you how to find a deal, right? Someone that can appraise a deal for you, help you draw up a scope of work for the deal as well, and fund it. Yes, $99 a month. I don't know what the problem is. It's on y'all. But anyways, guys, it is what it is. Now, guys, we also have a partner here. Full disclosure, I'm a partner of American Rounds, guys, which is pretty good. Guys, it is phenomenal. We're blowing up like crazy, guys. We just raised a couple $1 million to scale even more, guys. We're actually about to raise another $50 million as well. Also, it's exploding right now, guys. Man, they are a sponsor. So let's go ahead and play what they got to play, man, and hopefully that's about it. Here you go.
The CEO of American Rounds. We are in Pell City, Alabama at Fresh Value grocery store installing the first ever automated retail machine for ammunition. The stores were really the inspiration for it. I mean, they knew their customer base and they came to us and thought this would be a really good opportunity for their customer base. There's a lot of hunting community here in Pell City and thought that their customers would love an opportunity to be able to buy ammunition here at the store.
We're super excited to offer, what we think is the first ammo kiosk. We're always looking for ways to give our customer another reason to come visit our stores. Anything that we can do to help them make their shopping trips easier based on the feedback that we've gotten just from customers today. They are so excited about us having the ammo kiosk.
We're getting ammo!
One of the ways we're changing the landscape of ammunition sales is to make it more available. Being able to move into a place like a grocery store, supermarket makes it a lot more available to the public. But we're taking a different approach to it. Traditionally, ammunition is sold at outdoor type stores, your sporting goods stores, and it just sits on a shelf. It's very accessible. Because of that, there's a high rate of theft. But with our machines, as you can see here, we have a very secure automated retail machine. We're able to age verify. We scan a driver's license. It then takes 360 facial recognition for the purchase and matches it to the ID. So the machines really provide an opportunity for safe, affordable, and available ammunition sales.
There is no doubt that foot traffic will increase based on the feedback that we've gotten. And again, we're super excited not only to have it here, but in other locations in Fresh Value as well.
We're really excited about where we're going. We are going to continue to expand here in Alabama. We have a machine slated to go into Oklahoma, Louisiana, Texas. So over the next year, we're looking forward to, seeing these roll out all throughout the South and the Southeast.
Well, guys, again, that's American Rounds. That's American Rounds, man. the first AI-powered ammo vending machine in your grocery store. So you're basically saving, making 2 stops, going to the grocery store and then going to a Cabela's or Dick's. So you can actually make 1 stop, buy your groceries and also buy your ammo while you are actually there, guys. We'll be in 250 stores in the next 18 months. We're currently right now we're in 6. We'll be in 18 in the next 60 days, 50 by the end of this year, and then we'll have an additional 200 more by the end of next year, guys. Is exploding, guys. And we're talking about Oklahoma, Mississippi, Texas, Louisiana. We've been asked to come to Michigan, Washington State, Indiana. We've been asked to go to liberal places too. It's crazy, guys. So again, American Rounds, the first AI-powered ammo vending machine. But guys, man, that's all I had to have for today. Cliff, want to say anything, man, before we get off your dope?
Nah, man, same thing. Every week, you one deal away. One deal away. So, man, just take action, man. Just, you know what? Look at a deal. Don't buy it. Look at a deal. And call us and we'll hook you up. So,
For sure,
know,
baby.
yeah.
I agree with Cliff every time. You're one deal away from changing your life, guys. One decision and one deal away from changing your life. You have the council around you, and Cliff and I and our team, guys, tap into that council and watch your dreams come true, guys. Well, guys, thanks so much for your time. God bless you. You know, I always say that before you leave, and while you can, you see that thing, baby. Take that damn picture and give it to your mom and them. And holler at your partner. All right, guys. I'll see you next week. Peace.
Thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace.